Hello traders, welcome to Ford Revolution and Forex Institute. This is Kosnatsi, the founder and a senior trader of Ford Revolution and Forex Institute. So traders, in this video I will discuss or I will teach you how to identify the false breakouts, basically in a trend line breakout. Because traders, just to recap, you know traders that in a trend line strategy, there are two sub strategies within the trend line strategy. Firstly, we have like the trend line trading strategy, whereby we as traders we are following the trend. We are only executing trades based on the trend direction. So for instance, if the market is moving in a bullish direction, therefore we will only execute the bullish positions, or we will only execute like the buy position. When on the other hand, when the market is moving in a bearish direction, therefore we will only execute the sell positions. Okay, so moving to a to a second strategy, which is a trend line breakout strategy. So in a trend line breakout strategy, what happens, we only wait for the market to break the trend line. Thereafter the trend line, we can start to execute the trade. So in a trend line breakout, it's whereby the market will break the trend, okay, and thereafter it will change its direction. So for instance, if the market was moving in a bullish direction, therefore after the breakout you would expect the markets to change its direction to a bearish trend. Or on the other hand, if the market was in a bearish direction, or it was moving in a downward trend, therefore after the breakout we would expect the markets to change its direction to a bullish direction. So that is a quick definition, or that is a quick comparison between the trend line trading strategy and then the trend line breakout strategy. So in this video, I will mainly focus on the trend line, on the breakouts, okay, on the false breakouts in a trend line breakout strategy. Okay, so I will teach you how to identify the false breakouts or the fake breakouts. So in short, the fake breakouts, it's whereby the market it is changing. So sorry, it's whereby the markets form a breakout, but instead of changing its direction, it moved in a prior direction. So or in a previous direction. So for instance, if the market was moving in a bullish direction, thereafter the market forms a breakout. So we as traders, when we see a breakout, the first thing that comes to mind, okay, the market will change its direction. But instead of going in a bearish direction, the market continues to move higher. Okay, so that is the quick definition of the fake breakout. It's whereby the market form a breakout, but instead of form a breakout, but instead of changing its direction, no, the market continues to move in the previous direction. So now I want us to move to this picture. So in this picture, I will just use it as a quick demonstration of the fake breakout, and thereafter I will give you these 4 points, and then these 4 points will mainly assist you in like to be able to identify the fake breakouts in a moving market. So when the market is still moving, you can start to identify, okay, there is a breakout, but it seems like the breakout it will be a fake breakout. So these 4 points will assist you to be able like, to identify the false breakouts in a trend line breakout strategy. So going back, so now let's go back to this demonstration picture. So in this demonstration picture, you can see that we have this downward trend line, or this downward trend. So let's focus on this trend line here. So you can see here that we have this lower low, lower high, lower low, lower high, lower low, lower high, and then we have another lower low. So after this lower low, the market started to move in a bullish direction, and then it broke this trend line. So you know that, as I have indicated, that whenever the markets break the trend line, so the first thing that comes to us as traders, okay, the market has broke the trend line. So now we are expecting the market to change its direction. But you can see here what happened. Instead of the market like changing its direction, no, the market didn't change its direction. It moved to a bearish. It continued to move in a bearish direction. So that is the formation of the fake breakouts. Okay. So just to give you like the quick. So just to recap on the quick definition of the fake breakouts. So it's whereby the market it's forming that it's formed a breakout, as you can see here, that the market formed a breakout, but instead of going in it's because when the market is forming a breakout, the first thing that comes to us as traders, we think that the market will change its direction. But in a fake breakout, instead of changing its direction, the market will never change its direction. Instead, it will move in a previous direction. So that is like the quick definition of the fake breakout. So now traders, I want us to focus on these 4 points, and these 4 points will assist you to be able to identify the false breakouts in a moving market. Okay, so the first thing, this kind of move usually occurs about 1 to 3 candlestick after the breakout. So just to assist you, so you can see here traders that after, so we have this downward trend line after the breakouts. You can see 1 2 after the third candle the market move back. Okay, so this is the false breakout, and then the markets break the trend line again. 1 2 after the third candle it started to move again in a bearish direction. Same here, we have this bearish, but in here we didn't have like that case. Okay, and then the second point, it is important to pay more attention on the momentum of the candlestick after the breakout. So when the market is forming like a breakout in a trend line breakout strategy, the first thing that we need to focus on is the momentum of the market, or it's the momentum of the candlestick. The market must show us the strong candlestick. So for instance here, since the market is breaking like the bearish trend line, we are expecting the market to give us like the strong candlestick after the breakout. But here you can see that instead we do not have like the strong bullish candlestick. Instead we have like the bearish candlestick, the strong bearish candlestick in a breakout. Okay, so we can see that no, that even though there is a breakout, but the momentum of the candlestick are still bearish. They are not bullish. So you must also pay more attention on the momentum of the candlesticks. Sorry. Then moving to the third point, if reversal candlestick pattern occurs after the breakout, therefore consider the setup as false breakout. So this point, guys, is very important, and I will demonstrate to you what does it mean. So here, traders, after the breakout, so here for here, let's use this chart. So after this breakout, you can see that the market, instead of forming like the strong bullish candlestick, it formed a bearish engulfing candlestick pattern. Okay, so if you understand, or if you understand the candlestick patterns, you will see that this is the bearish engulfing candlestick pattern. So the main point is here, traders, is that when the market is breaking the trend line, but instead of forming like the candlestick in a new direction, but instead it forming like the reversal candlesticks, you must see that okay, this breakout might be a false breakout, because instead of forming, because here we have like we're expecting a bullish trend, but you can see okay, the market is breaking this bearish trend line, but instead of forming like the strong bullish candlesticks, the market is actually forming like the bearish reversal candlestick pattern, which is the bearish engulfing pattern. Let's go to the second point. The market came here, then it formed, then it breaks the trend line again, but instead of forming like the strong bullish candlestick, it's again formed the evening star reversal candlestick pattern, and we know that the evening star reversal candlestick pattern is the bearish reversal candlestick pattern. Let's go to the third breakout. The market, okay, after this it came back again, and then it started to move in a bullish direction again, but the market, instead of forming like the strong bullish candlesticks, instead the market formed another bearish reversal candlestick pattern. So the main point here, traders, is that whenever the market forms the breakouts, if it formed after the breakout, if the market forms the reversal candlestick patterns after the breakout, therefore you must start to see okay, even though we have like the trend, the breakouts, however, based on the candlesticks, I can say that this might be the fake breakouts, because the market is forming the reversal candlestick patterns. Okay, so as it happened here, you can see that the market formed the bearish reversal candlestick pattern, again a breakout, bearish reversal candlestick pattern, again a breakout, another bearish reversal candlestick pattern. So the main point is that whenever the markets broke formed a breakout, whenever it formed the reversal candlestick pattern, you might start to see okay, even though we have like the breakout, however, this breakout might be a fake breakout. Now let's go to the last point. The fake breakout is the main reason it is dangerous to execute position based on the immediate trendline breakouts. Traders, I cannot emphasize this enough. Traders, you know I always do this on my videos. I always emphasize the importance of waiting for the pullback after the breakout. Not only in a trend line breakout, in any type of chart pattern, even on whenever you see a wedge pattern, you must after the breakouts of the wedge pattern, wait for the breakouts. After the breakouts of the triangular pattern, wait for the breakout. Sorry, wait for the pullback. So the main point here, traders, is that do not trade immediate breakouts because the the pullback, it gives us traders the time to be able to analyze the breakouts. Okay, so when we see a breakout, we must wait for the pullback in order for us to be able to analyze the the breakout, whether this will be the true breakout or it will be a fake breakout. So the main point here, traders, wait for, okay, after the breakouts, do not execute trades immediately after the breakouts. Wait for the pullback in order to analyze the breakout itself. So whether you can determine whether you have like the valid breakouts or you have like the fake breakouts. So traders, that is all I can say about the fake breakouts. I will see you next time. Thank you for watching.